The global economy is a combination of good news and bad news. Good news, of course, is the real economy is doing quite well. The United States is now in its 92nd month of job growth, and news recently has been that it probably will grow faster in the second half than in the first half.
Over the next 12 months, the outlook for the U.S. economy is pretty strong. I think the probability of recession over that period is really pretty low. We have big support from fiscal stimulus, both tax cuts and spending, but also financial conditions. Equity markets and credit are very supportive for growth. The problem is once you look beyond 12 months, things start to change. In particular, we're not going to get as much support from the fiscal side, plus the Fed's going to be raising rates over that period. So by the time you get to the middle of next year, the outlook's going to be worse.
So we've got a constructive view on the Eurozone economic outlook. We think growth will remain above trend, that inflation will slowly rise in the period ahead, and that in turn will generate a further normalization of the ECB's monetary policy. Three factors in support of that conclusion concern firstly an exaggerated slowdown in the first quarter of this year, with domestic demand fundamentals still very solid. Secondly, the underlying imbalances in the Eurozone now are much reduced relative to pre-crisis phases. And thirdly, there are increasing evidences of capacity constraints in the Eurozone, and that in turn I think should generate higher investment and higher productivity growth going forward.
The topic I focused in today's Global Economic Panel was the likeliness and likely trigger of monetary policy normalization from the Bank of Japan. Our current idea is nothing would happen in terms of monetary policy normalization from the Bank of Japan. Simply because very much stagnant wage and inflationary condition in Japanese economy wouldn't allow BOJ to start normalizing monetary policy anytime soon. So it should stand for a very stable and depressed condition of rates for a while.
Despite a rebound of some headline production numbers in May, I believe that economic growth in China will slow in the next few months because of falling growth rate of property investment and infrastructure investment as a result of Chinese government's deleveraging efforts. I believe the markets underestimate the slowdown on the one hand, but may also underestimate what the Chinese government will do to ease policies in the next few months.